SharpLink has made a significant move in the cryptocurrency market by acquiring $360.9 million worth of Ethereum, ETH, equivalent to 56,533 ETH, as part of its ongoing treasury initiative. This purchase elevates SharpLink's total ETH holdings to 797,704, making it the second-largest corporate holder of Ethereum after BitMine. The acquisition, funded through an at-the-market issuance program, highlights SharpLink's strategic focus on Ethereum as articulated by co-CEO Joseph Shalom. The company has also accrued 1,799 ETH in staking rewards since June and retains $200 million in cash reserves for future acquisitions. Following this announcement, SharpLink's stock saw a 3.31% increase, reflecting positive market sentiment and investor confidence in the company's Ethereum-centric strategy. In addition to its cryptocurrency activities, SharpLink has filed with the SEC to register 3 million additional shares under its inducement award plan. This program is designed to attract and retain talent by offering stock-based compensation to new or rehired employees. Such incentives are intended to align employee interests with long-term shareholder value, a strategic move to bolster SharpLink's competitive edge in securing skilled workers while managing cash flow. The plan's oversight will be managed by the Compensation Committee or other independent board members, ensuring that the inducements align with the company's broader financial and strategic goals. These developments underscore SharpLink's commitment to leveraging both digital assets and human capital to enhance its market position and shareholder returns.
Cryptocurrency markets faced a significant downturn as Bitcoin's price fell below the key support level of $110,000, trading at $109,500, its lowest since early July. This decline has had a ripple effect on cryptocurrency stocks, with major players like Coinbase Global, Circle Internet Group, and MicroStrategy experiencing declines of over 5% in the past week. Circle, a stablecoin issuer, saw its stock plunge by 13% during this period. Ethereum, the second-largest cryptocurrency, also saw a drop, trading at $4,400 after reaching a record high just under $5,000 on August 22. The sell-off is attributed to a broader risk-averse sentiment among investors, coupled with substantial outflows from ETFs tracking Bitcoin and Ethereum. The current market dynamics are influenced by investor caution as stock valuations remain high, and attention shifts towards upcoming corporate earnings, particularly from chipmaker Nvidia. Analysts are divided on whether this marks a healthy market consolidation or the onset of a more severe correction. Despite recent declines, Bitcoin has gained 17% year-to-date in 2025, while Ethereum has risen by 36%. As the market awaits further developments, investors are closely monitoring these trends, which could have significant implications for market sentiment and investment strategies in the cryptocurrency sector.
The U.S. economy is demonstrating unexpected resilience despite a cooling housing market, according to the latest data from the Commerce Department, Federal Housing Finance Agency, and regional Federal Reserve banks. While durable goods orders fell by 2.8% in July, this was a smaller decline than anticipated, and core durable goods orders, excluding defense and aircraft, rose by 1.1%, indicating robust business investment. This suggests that companies continue to invest in equipment despite a broader manufacturing slowdown. Meanwhile, the housing sector remains under pressure from high mortgage rates, with the FHFA house price index slipping more than expected, and annual growth slowing. Consumer spending and the services sector are key stabilizers, with Redbook sales showing a 6.5% year-on-year increase, reflecting solid retail activity. Although consumer confidence has slightly dipped, it remains above expectations, underscoring steady demand. Regional Federal Reserve reports highlight a divide between manufacturing and services, with the latter showing significant expansion. The Dallas Fed reported increased services revenues, and the Texas Outlook Index saw notable improvement. The Atlanta Fed's GDP Now model maintains a third-quarter growth estimate of 2.2%, indicating moderate but steady economic growth. This resilience, supported by investment and consumer spending, defies predictions of a sharper economic downturn.
Argentina's central bank has intensified its monetary policy by increasing bank reserve requirements amidst a deepening political crisis. The Central Bank of Argentina, BCRA, announced that starting September 1st, banks must hold an additional 3.5 percentage points of deposits as reserves, which can be met with treasury bonds purchased in a recent auction. This move follows a series of tightening measures in August, including raising total reserve requirements from 40 to 50% and mandating daily compliance. These measures come in response to a weak debt rollover, where only 61% of maturing peso securities were renewed, and the Treasury faces significant local debt maturities worth approximately $57 billion. The financial markets have reacted negatively to these developments, with the S&P Merval Index dropping about 5% over 2 days and the peso experiencing volatility. The central bank strategy aims to withdraw pesos from circulation and bolster demand for government bonds, but it places additional pressure on banks and borrowers. Complicating the economic challenges is a corruption scandal involving the Administration for National Disability, which has implicated high-level aides and threatens President Javier Milei's political agenda and upcoming midterm election prospects. The dual pressures of financial stabilization and political integrity present significant risks as Argentina navigates this turbulent period.
Brazil's economic landscape presents a dichotomy as the country grapples with a widening current account deficit, despite a surge in foreign direct investment, FDI. In July, Brazil's current account deficit expanded to $7.07 billion, significantly surpassing analyst expectations of $5.6 billion. This growing deficit highlights Brazil's increased spending of foreign currency over its earnings from exports, services, and remittances. The primary contributors to this deficit are a narrowing trade surplus and increased repatriation of profits by foreign companies. However, Brazil attracted $8.3 billion in FDI in the same month, a figure that far exceeded forecasts and nearly tripled from June. Temporarily offsetting the deficit, inflation in Brazil has shown signs of moderation, providing a temporary reprieve. Mid-August saw a 0.14% decline in prices, marking the first decrease since the pandemic, driven by lower food and electricity costs. Annual inflation now stands at 4.95%, down from 5.3%, aligning closely with expectations but still above the central bank's target. This inflationary trend may alleviate pressure for further interest rate hikes. Despite the positive investment climate, the persistent external deficits pose a risk to Brazil's long-term economic stability, presenting a mixed outlook for international investors. While Brazil remains an attractive destination for capital inflows, the growing external vulnerabilities necessitate cautious optimism regarding its economic future.
Canary Capital has filed with the U.S. Securities and Exchange Commission, SEC, to launch an exchange-traded fund, ETF, linked to the meme cryptocurrency Trump coin, Trump. This filing comes on the heels of Canary's recent application for the Canary American-made crypto ETF, MRCA, signaling a strategic push into the burgeoning market of cryptocurrency ETFs. Other financial firms, such as Osprey Funds and Rex Shares, have also expressed interest in launching ETFs tied to Trump coin, indicating growing institutional interest in meme-based digital assets. The move to create a Trump coin ETF is noteworthy as it reflects the increasing mainstream acceptance and financialization of meme tokens, which are often characterized by their volatility and speculative nature. The regulatory approval of such ETFs could potentially lead to increased liquidity and legitimacy for Trump coin, impacting its market valuation and investor interest. This development also highlights the SEC's evolving stance on cryptocurrency products, which could have broader implications for the cryptocurrency market and regulatory landscape. As the situation develops, market participants will be closely monitoring the SEC's response to these filings, which could set a precedent for future cryptocurrency-related financial products.
Meta Platforms Inc., Meta, is under scrutiny following a report from the Tech Transparency Project, which reveals that the company has been financially supporting child safety organizations to bolster its image amidst growing criticism and legislative pressure. The report highlights that these organizations, including the National PTA and Connect Safely, have publicly supported Meta's initiatives, such as the Instagram teen accounts launched in September 2024. However, the financial ties between Meta and these advocacy groups raise questions about the authenticity of their endorsements. This strategic maneuvering aims to reshape the narrative around the impact of social media on youth, with Meta also funding academic research and operating the Trust, Transparency and Control (TTC) labs to influence policy discussions. Despite these efforts, Meta's stock saw a slight decline of 0.5% on Tuesday, reflecting bearish sentiment among retail investors. The sentiment on platforms like StockTwits remains negative, with users expressing concerns about the stock being in a hyperbubble. This sentiment is further evidenced by a 145% increase in user message count over 24 hours, indicating heightened investor attention. Nevertheless, Meta's stock has experienced significant growth, with a 28% increase year-to-date and a 44% rise over the past 12 months, suggesting resilience in its long-term performance despite current challenges. The ongoing investigation and public scrutiny could have implications for Meta's reputation and strategy moving forward, particularly in how it navigates regulatory landscapes and public perception.
GoPro (GPRO) has recently announced a significant milestone in its AI training licensing program, with subscribers contributing over 125,000 hours of video content. This initiative allows GoPro subscribers to monetize their video content by licensing it for AI model training, with participants earning 50% of the licensing revenue generated. Initially launched as an invitation-only program, GoPro plans to expand this to all U.S. subscribers and potentially to international markets. The program's success has sparked a 3,000% surge in retail investor discussions on platforms like StockTwits, shifting sentiment from bearish to extremely bullish. Despite the positive sentiment and strategic initiative, GoPro's stock dipped nearly 3% in early trading. However, the company's shares have shown strong performance over the year, with a 41% increase year-to-date and a 21% rise over the past 12 months. CEO Nicholas Woodman expressed optimism about the program's potential impact, highlighting ongoing discussions with AI data licensees to meet the demand for real-world video content. This move could position GoPro as a key player in the AI data training market, leveraging its extensive library of user-generated content to drive future growth and revenue streams.
NIO Inc., NIO, a leading Chinese electric vehicle manufacturer, experienced a 9% surge in its stock price following an upgrade from J.P. Morgan. The bank raised its rating from neutral to overweight and increased its price target from $4.80 to $8, reflecting a 31% potential upside. This optimism is driven by anticipated growth, including a projected 50% increase in delivery volumes by 2025 and 47% by 2026. NIO's recent 38.7% increase in vehicle deliveries in 2024, along with upcoming events like the launch of the ES8 SUV and NIO Day, contribute to positive investor sentiment. Retail investors are particularly bullish, with some predicting the stock could reach $10 by the end of the week. The unveiling of NIO's new 5-seater BEV SUV, the Onvio L80, at the Guangzhou Auto Show, is also expected to bolster its market position. In the telecommunications sector, EchoStar Corp. SATs saw a dramatic 76% increase in its stock price after AT&T Inc. T agreed to acquire its wireless spectrum licenses for $23 billion. This acquisition enhances AT&T's 5G capabilities and positions it as a leader in advanced connectivity across the U.S. The deal includes 50 MHz of low-band and mid-band spectrum covering over 400 markets, supporting AT&T's expansion of home internet services and the transition of legacy customers to next-generation broadband. EchoStar plans to use the proceeds to retire debt and fund growth initiatives, benefiting from a 130% year-to-date stock increase. In the energy sector, Energy Fuels Inc. UUUU experienced a 17% stock surge following a partnership with Vulcan Elements to strengthen the U.S. supply chain for rare earth magnets. This collaboration aims to provide high-purity rare earth oxides sourced from U.S. mines, reducing dependency on Chinese supplies amid geopolitical tensions. The partnership aligns with U.S. strategies to enhance self-sufficiency in essential materials, with Energy Fuels stock appreciating by 144% year-to-date, reflecting strong market approval of its strategic initiatives.
Apple Inc., AAPL, is reportedly exploring the possibility of acquiring two artificial intelligence startups, Mistral from France and Perplexity based in the US. This interest was spurred by investment bankers who approached Apple with proposals for large-scale AI deals earlier this summer, according to a report by The Information. However, Apple's response has been tepid, aligning with its historical tendency to avoid major acquisitions, while tech giants like Microsoft, MSFT, Amazon, AMZN, and Google's parent company Alphabet, Google, have invested heavily in AI through partnerships and licensing agreements. Apple has maintained a strategy focused on smaller acquisitions, completing around 7 such deals this year. The potential acquisitions of Mistral and Perplexity highlight Apple's cautious approach to expanding its AI capabilities. This strategy contrasts with its competitors' aggressive spending to secure AI talent and technology, which could influence Apple's competitive positioning in the rapidly evolving AI sector. While these smaller deals have contributed to Apple's product development, the company's reluctance to pursue large-scale acquisitions may impact its ability to compete with peers that are heavily investing in AI advancements. This development is significant for investors and market analysts monitoring Apple's strategic direction in the tech industry.